welcome. It's so great to have you here. Really appreciate your time today. I know it's quite a busy time for everyone. Here are the areas that we're going to cover. We'll go through understanding your cost of delivery, cost of service delivery, calculate and attributing costs to your clients, a bit of a process for understanding client profitability and how Beck goes about doing this within her practice, and then how to deliver services efficiently and ensure recoverability. And we will be going through a bit of a demo of how Ignition can help you to systemize and structure your approach to engagements and pricing and really standardize that within your practice. Understanding your cost base is going to help you price better. And we'll touch on this later on in the webinar. You need to have a really clear and crisp understanding of what it costs you to deliver these services to these particular client groups so that that can inform your pricing. There needs to be a baseline. It will give you confidence when presenting to clients. I've seen a lot of accountants out there being quite transparent of late with how they actually arrive at the cost for the services, even to the point of showing the workings and here are our, the absolute breakdown of all the costs that go into a quote. And Beck can share as to whether she thinks that's a good idea or not later on in the webinar, but it will help to set that bar and provide a baseline and also give your team confidence and transparency around what the clients are being charged and how your pricing structure works as well.
I think if nothing else, it just gives you that confidence to deal with not just the external conversations, but even just that internal doubt that we can all have as business owners, whether or not you're pricing correctly, and that gut feel, I'm going to raise that from $1,000 to $1,100. Let's put in the effort to make sure that that price rise is actually appropriate. And maybe it could be a little bit more, or you've put it up to a point that you're making great money, which is wonderful. But I think that it's good to actually understand the number and the data instead of making all our decisions on gut feel. This should be quite understandable to everybody on the call, but our fixed direct costs in an accounting firm, these are those items that are clearly identifiable. So when you're allocating that cost out, so if it is a zero subscription, you've got that invoice that says it's for this client, it's this amount for this period of time. So very, very clear identification of that cost. When you're an ability to then say this cost can be attributed directly to that client. So that allocation process is incredibly simple. And when you're allocating out those direct costs, it's always going to depend on the level of detail that is required to actually be able to allocate that over. If you have a subscription for one of these other providers, say, just chucking out examples here, if you have a receipt bank or now called Dex subscription, a lot of us have those in a bulk way. That would be much harder to allocate directly to a client because the costing is variable depending on the amount of clients. It's not actually a direct cost. So then if we look at our variable direct costs, these items can be tracked and the actual cost allocated to the client or service. And this is where time and timesheets and become very important, because our key item that we would be applying to a client to figure out whether or not their jobs are profitable will be the time spent. That's one of the key indicators of profit on a job in an accounting firm. Regardless of whether or not you're using fixed fee or time billing, it's that time that becomes really important in our profitability, because in a really crude way, we effectively sell people in our business. And these items can also be estimated and allocated to clients based on, our timesheets or other criteria. So I've talked about the direct costs, and that's the simple part. Our overhead costs are those items that cannot be easily tracked or attributed to a client, but we still need to allocate them to our profitability. And this is where there's two methods. So you can either use your revenue basis or your labor basis. Your revenue basis then means that the revenue generated by that client is what drives the overhead charge, or your labor basis will be the amount of time spent is what will determine the cost of the overhead allocation. So this is an example where I'm going to go through, we start with just the overhead allocation, because this is the tricky part that you've got to work through when you're calculating out the profitability. So in this example, we've got revenue being generated in a business of 100,000. Let's say our overheads are 30,000, and the total productive hours in a business, in this firm, to generate that $100,000 in revenue is say 500 hours, or really lovely round numbers here. So if you're going to allocate your overheads on a revenue basis, you would calculate that out by dividing your revenue over your overheads. And you would have, in this example, $30,000 divided by $100,000, which should give you 30 cents. So that means for every dollar of revenue that is generated for a client, you would allocate 30 cents in overhead costs to calculate out the profitability. If you're looking at your labor charges instead as a overhead allocation, you could have a look at, you'd have your overheads of $30,000 divided by the amount of hours spent to actually generate that work, which is the 500 hours. This would mean that for every hour one of your team members spends on a job, you would allocate $60 in overheads for that client to work out some of that profitability.
So talk us through this example you've put together of understanding profitability on a client basis. A lot of numbers on the screen as well.
There is. And this just leads on from the previous example as well. And just a reminder, as Ethan already said, you will get these slides, so you'll be able to work through this in more detail later if you need to. But that previous example we had revenue of $100,000, overheads of 30,000, productive hours of 500. And then if we want to figure out using that information, which is what we use for our overhead allocation, how profitable a specific client is, you dig down then into the client costs and revenue. So we're going to work on out of that firm that has $100,000 in revenue, a client that generates $10,000 out of that 100. The specific disbursements for that client, which might be subscriptions or something else, is $300. We spend 40 hours of staff time to generate that $10,000, and our staff's average hourly rate is $70 per hour. And I'm not going to dig fully into how that's calculated, but when you do look at that, look at your wage costs, your actual wage, and any on costs that also go towards that. So superannuation, workers' comp, payroll tax, depending on your business as well. I have total confidence everyone on the call can calculate that out for themselves. You then have the two options of figuring out your profitability. And this is where your overhead allocation method will impact the way that profit actually looks for each of your clients, and is why it's important for you to pick a model that works best for your business. So if you're looking at a revenue basis for overhead allocation, and this would be more common if you consistently spend the same amount of time on the same amount of work, on the same type of work. In this example, your revenue would be $10,000. Your direct fixed costs are $300. Your direct variable costs, which would be the 40 hours to generate the $10,000 in revenue by your $70, is $2,800. And your overhead allocation based on the 30% that we previously calculated is $3,000. So this one, when we're looking at it on a revenue basis, this client would be generating your business $3,900 in profit for that $10,000 in revenue. If we then change that last bit of the overhead allocation for a labor basis for overhead, this client would actually generate more profit for your business at $4,500, because the overhead allocation would be based on 40 hours by our $60 rate. Now, the reason why this example has generated this result is probably because the average amount of time spent on this client would be less than other clients doing that same kind of work or generating that same kind of revenue. This also then drives in the next step that you could potentially look at. And if you're particularly looking at overhead allocation based on labor, what kind of jobs generate better profits because they take less time?
Probably one of the most common questions we get asked is, what should I charge my client? And particularly being a tool that facilitates that whole client engagement, proposal, pricing and payments piece for you. This comes up really regularly, and because it forces you to think about how are you going to structure out your services, the packages and so on, so that it will be profitable for you, and so that you won't be either leaving money on the table or overquoting. So Beck, there's a couple of different options here. You've got client categorization tool and the example pricing matrix, where you've used to bundle your clients into different groups. Talk us through how you guys do this at Business Depot, and I guess how you've systemized this, because I think that would be the big question from folks on the call is, like, how do I know where to start with this if I've gone scattergun in the past and each client's on sort of a bespoke price? Just because that's what they've paid in the prior year. How do you guys go about this?
This is where going through that profitability process, and particularly the profitability process on the labor method, becomes really important, because then you start to realize that you do have jobs or particular clients or types of clients that you can do the same kind of work for at different speeds. And there are things that contribute towards that. So doing a BAS for a small client will usually be quicker than doing a BAS for a large client. So your profitability on those jobs, if you had the same amount, would be different, which is why we started to implement tiered pricing. So if it is a large client, we need to know how to identify that, and they would get charged more, because otherwise we would make less profit on that job, which is not what any of us want to do. So we've gone through a process of creating a client categorization tool where we've got 3 tiers of clients, so your small, medium, and large. And then we've identified things that would make a client move up the ranks. So whether or not they have more bank accounts, whether or not they have finance leases, the amount of employees, all these different things. And you can use items like this or items that work in your business and based on your clients. And as they move up the ranks, you charge them more based on your client profitability calculations. We then take that, so now we can categorize our clients, and we've created these different fees. So that becomes really easy when pricing out our clients now. We can figure out where they sit in our categorization tool, and this is how much we charge for those different services. We've tied our annual re-engagement process as closely as possible to the point that we're doing interim reviews or tax planning with our clients. It's a great way to assess it. It's before the end of the financial year. It's that moment where we're all looking in our clients' files at their tax situation to date, where we're giving them some options around what they can do to change things to make sure that they have the best position at the end of the year. It might be the time that you're looking at doing restructures. Either way, it's the moment that you're digging in and looking at something other than just the end of financial year results for your clients. So it's a wonderful time to start thinking about what you're going to charge them in the next year, and to have that conversation with them around additional services or value in current services. And it's then quite a natural time of year to do it, as opposed to randomly contacting them at the, beginning of February, because you've got some time on your hands to say, hey, we're going to increase your prices. It's becomes part of that ongoing conversation. And once you do it enough, it just becomes natural to not just your discussion points, but your clients start to expect that. They know every year you're going to talk about prices and services, so they almost anticipate it.
We have developed partnerships with each of the industry bodies to provide their engagement letter templates within the product. So particularly for CAs who are on today, you'll be able to access their latest engagement letter template within our product. That allows you to automatically stay updated with all of the changes to the guidance that come through. So you'll see those sort of annual changes get updated in the PDF template. We can automate that for you and make it really easy for you to send out compliant engagement letters as part of your client engagement process. Beck, what are the benefits? What's the result of revisiting your pricing, making sure you're properly engaged for the work, and then making sure your recoverability is really strong? What's been the impact in your firm beyond just getting to do a lot of webinars with me?
Finding the time to be able to do that's been amazing. But we work with better clients. That's probably the best part of this process with Ignition and repricing, is that we're now only working with clients who want to work on our terms, because we're very firm with our pricing. We revisit it every year. We're firm with the services that we're offering as well. And that means that my team feel as though that they're really providing value in their everyday on the work that they're doing with clients. And that's really nice, because I remember coming up through the ranks, working on those clients that nobody ever wanted. As a junior, always got dumped with the clients that were either too whingy or didn't want to pay, and you knew you were going to have a huge write-off, and that doesn't feel good as an employee. So I like that I don't have to deal with any of that anymore, and I love that I have fewer awkward conversations with clients than ever. We're just not having those conversations after we sneak a bill in the mail tray a month after the job's done, because our clients know how much they're paying us all the way up front before we start the work.
I really appreciate your time today. Hopefully it was a valuable session for you, and look forward to seeing you on another webinar soon. Have a great rest of your week, and thanks for all the great feedback in the chat. Really appreciate it.